Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Hello, this is the Forex Week in Review on the 2nd of April at 4 p.m. Central Time. Starting off the Aussie dollar, Canadian dollar. Had a good week start to the week. Now, with this, two candles up against the 200 moving day average, if you took this for a 1, 2, 3 punch out, would have been a risky trade. Did take this short and went up, came down, and went all the way back to stop me out here on this candle for a loss. Aussie dollar, Swiss franc. Sunday, we had a morning star. Even though the Heikin-Ashi was above the RL10, went up. If you took this order, you had a loss here on this day and no further trade for the rest of the week. If you did take this order here with the Heikin-Ashi body below the RL10, would have been out for a loss here on this high. Aussie dollar, Japanese yen, also kind of consolidating. Had initial trade here with the Heikin-Ashi low as your stop loss. Heikin-Ashi body above the RL10, incredible going to the upside. Came down, went up, and then for a nice, if you stayed in it, trying to use the RL90 for a target, would have had an out here, a potential loss, or if you stayed in it, would have stopped you out here at this particular Heikin-Ashi low for a reverse wedge consolidation. Did not come up and touch the RL90 here. So initial strength here to cross the dragon, and as you can see here, it didn't do an RLXD until over here on this candle. Aussie dollar, New Zealand dollar, wonderful trade here. Had initial short here, and Heikin-Ashi body below the RL10. Another one short here. Heikin-Ashi body below the RL10, and a short here. Heikin-Ashi body below the RL10. So we're seeing a significant rejection of this level, kind of like what it did right here, and then it started gaining steam. Now, if you had your target at the RL90, that was a good trade. But since this was below the RL10, not on this candle here, Friday. No further trades after Friday here for Aussie dollar, New Zealand dollar. But good overall short. Aussie dollar, US dollar. Had an initial trade here. Heikin-Ashi body above the RL10. Another trade here. Another trade here. If you were in this trade on these two, you would have been stopped out at the Heikin-Ashi low. With this trade, would have stopped out here on this trade. Came down, did not take this trade. The Heikin-Ashi body was not below the RL10. Is short, and no further trade the rest of the week. Nice trade here for a 1, 2, 3 punch out on CAD Swiss franc. This wasn't initial trade here, no initial trade here too as well. Now, if you did take this, you would have been out as soon as there, because the spread on the long was right up against the changeover of the candle. Nice trade here for the CAD Japanese yen. Monday took this trade for a nice 1, 2, 3 punch out. Swiss franc Japanese yen. If you took this trade here, would have been out for loss at the low of the candle. Looked like a nice tower formation happening here, or cup. Initial candle here for a short gain to the RL90. And if you took this trade here, trying to get to the RL270, would have been out for loss at the low of this candle. Did not reach the RL270, kind of hovering around the RL90. Euro Aussie dollar. Sunday took this initial trade with my stop at the Heikin-Ashi high. Came all the way down to here, moved my stop to break even for another order. Came back, stopped me out for no risk trade. Came in for a long on this candle, was out for a loss on this day. No further trade the rest of the week. Euro Canadian dollar. Nice 1, 2, 3 punch out. Euro Swiss franc, consolidating all throughout. In fact, I'm taking this off my list based on the poor performance, not only last year but this year, even with all the volatility happening. There's something happening with the euro that is being affected by all the currencies. More national programs are going towards their own currencies. For example, the British pound series, maybe going back to the German mark. So this is, the euro is acting pretty strange as far as how it's being affected by other currencies. So I'm going to go ahead and take this off my watch list here. Euro, British pound, beautiful. 1, 2, 3 punch out. Now, for the euro Japanese yen, I did go ahead and place my stop here at the RL270 instead of right at the low. It was too close for the spread, so went in there for a nice 1, 2, 3 and was out at the RL90. I took this trade for a small loss on Friday. Here on New Zealand, nice trade here for a nice 1, 2. Again, I put my at least one indicator away. I put it here at the high of this Heikin-Ashi for a nice 1, 2 out at the RL270. Now, if you did go in for another short here because the Heikin-Ashi bought significant strength to the downside, you would have had a nice gain here at the RL270. Here, another short would have been out unless you had your stop at one indicator away, which would have been the hump of the dragon. Would have hit the RL270 again. You can only do this in terms of whether or not the Heikin-Ashi body is below the RL10. And then another short here for a nice quick win here on the RL270 as a target. But all trades out on Friday. Here on the US dollar, weak short here north of the RL10. Took this initial short here, was out for a loss. Had 2 candle rule, out for a loss on Friday. British pound, Aussie dollar, nice 1, 2, 3 out. Now if you had your stop here at this gravestone or Morningstar, this you would have been out for a loss. Did not take this trade as far as, even though the Heikin-Ashi body is below the RL10, had significant support here, bounced right off of it. Came up here for a 1, 2 out at the Z3, showed significant emerging dragon, had summer, fall, and then summer again, so anticipate more price action to the upside. British pound, Canadian dollar, this could be a potentially collapsing dragon. Right now it's finding support right at 200 moving day average. This was 1, 2, 3 that I missed. This no further trade all the rest of the week, all below the RL10. No significant strength to the upside. British pound Swiss franc had missed this and did not trade it. Did trade this with my target here at the RL90. Hit it, a 1, 2. Looks like a good emerging dragon. British pound Japanese yen, wonderful trade here. Had my stop here at the low of the Heikin-Ashi, but here, now it started going below the RL10 for a nice 1, 2, 3 punch out. Did not stay in it as it continued to go up. This was a pretty significant dip for emerging dragon, but as you can see, nice emerging dragon in the end. British pound New Zealand dollar, had initial short here with a loss and no further trade the rest of the week. Actually turned green for this short and did not take it. British pound the US dollar, no trade, no trade, no trade. Took this trade on the last day for a small loss here on Friday. New Zealand Canadian dollar, nice 1, 2, 3 punch out, and then no further trade the rest of the week. Heikin-Ashi body was red above the RL10. Could be another collapsing dragon. New Zealand Swiss franc had this potential long, was out for a small loss, in for the long, out for the small loss here, even though the Heikin-Ashi bodies are above the RL10. If you did take these longs and were at least one indicator away, once it got up here to the hump of the dragon, you put your stop loss here at the belly of the dragon. Continued price action go up, would have been out on this candle. Heikin-Ashi bodies below the RL10. New Zealand Japanese yen, kind of the same staggered progression through there. We had the RL270 here. All these Heikin-Ashi bodies were above the RL10, so significant price action as far as momentum. If you had your stop loss here, one indicator away, nice gain here for initial gain, crossed over the RL270 for significant support. Move your stop loss to break even. Another long here, keeping at least one indicator away, which would have been the RL10 at this point, or the edge of the river as you can see it here. And then out on Thursday for nice gains with these Heikin-Ashi bodies above the RL10. These wicks are just trying to stop hunt people out of their particular trades. But as you can see, Heikin-Ashi kind of clouds all that noise that as far as price action and the big banks trying to stop hunt. So if you stick with momentum at least one indicator away, you can see significant gains, especially when you have significant strength in price action here. So this may go to spring next week, and we have a significant RLXD here on Thursday. Zealand US dollar, kind of consolidating here at this point. No trade here, loss, trade here, out for a scratch here on Friday. US dollar, Canadian dollar, again, more consolidation up there, no trade. All of these are green Heikin-Ashi till we get to Wednesday. Initial short here, hit the RL90, my target, out, no further trade. And as you you can see, it came right back up on Friday. So no trade on Wednesday, out on Thursday, hit the target and done. I did not take this trade, even though the Heikin-Ashi body was below the RL10. I could have, if you did, you would have been out for a scratch here at this point. So what we see here is an RLXD here, and then break through the belly of the dragon to retest the RL270. This is significant strength here as it's consolidating. If this becomes a collapsing dragon, it'd have to break through the RL272 as well. US dollar, Swiss franc, all considered significant strength. Look at this. Emerging dragon, emerging dragon, emerging dragon. All right, so for this week, it was a week long. Went out, had one long order on Tuesday, was out on Wednesday because the close was below the RL10, and then no further trade the rest of the week. US dollar, Japanese yen, significant price action to the upside. Had 1, 2, 3 punch out. Silver looked like a significant reversal here. Could be setting up for an RLXD here. Had an initial collapsing dragon here after the 200, but it has to break through the RL90 and the 200 before we have significant more momentum to the upside on silver. Gold, same thing. However, this shows a significant reversal. And the reason why this isn't a collapsing dragon or potential collapsing dragon, look at the belly of the dragon here, ice the belly of the dragon here. This could have a W effect, which is very bullish, and could indicate significant inflation pressures to the upside. Well, folks, that's all I have for the Forex Weekend. We're currently conducting a Forex boot camp and a Forex intermediate course. If you're interested, click on the link below. And remember, ruthless risk management. Have a great weekend. Happy Easter, everyone, and I'll see you on Sunday.
Well, if you like this video, go ahead and hit the like button below and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.